Focus and welcoming on board Mr. Sanjay Thapar as well. He's the CEO and Executive Director at SJS Enterprises. He's joining us to talk to us about the fundraise plan that the company has. So let's begin with that only, Sanjay. The fundraise is, what's the utilization of that fundraise that you're planning? And it seems like it's happening at a price which is lower than the current market price. Could you explain to us what's been the investor feedback, etc. there?
So we have a promoter of the company buying additional stake to increase his stake in the company because he is very bullish on growth prospects for the company. So that is the reason. So Mr. Joseph, he is the promoter in the company and one of the co-founders. So he is acquiring 6 million shares fundamentally to increase his stake in the company. And he is being allotted these shares at a price of 500 rupees. Now, Joe sold some stake when the company went public in 2021, sorry. And his net acquisition price for this, after the payment of capital gains and the fundraise costs, was close to about 455 rupees. And he's today investing at 500 rupees, which is at a 9% premium. And I would also like to mention there are SEBI regulations on ICDR norms for calculation of share price to be sold to a promoter. And the ICDR regulation price is 455. So he's almost buying it at a 12% premium to the SEBI preferential price.
It's just that it seems a bit detrimental to your minority and retail shareholders because the current market price is 555. And if the promoter is that confident, the street would have lied if you would have bought it from the open market, etc. But point taken on the regulations being met and still a headroom available there. Sanjay, just wanted to shift focus to the company's performance itself. In FY23, you managed to miss the guidance because you talked about a 25% growth. You delivered a little lower than that. But in FY24, what's the growth outlook looking like? Are you likely to, grow by around 40-50% because that is what the analysts are penciling in?
We've guided the market that the top line should grow at about 50% based on the new business wins that we're getting, plus the acquisition that we've announced a month ago of Walter Pack. This is a leading player in the decorative space, specializing in in-mold forming parts, has marquee customers like Maruti Suzuki and Tata Motors as its key customers. So all put together, we should grow the top line by 50% and our PAT growth should be in the region of 40% over last year. So that's what we've guided the market to. And we're quite optimistic to achieve this.
Are you considering any more acquisitions in this fiscal?
We are. So SJS is a very cash generating company. So we generate a lot of free cash. So current cash on our books is close to about 165 crores, out of which this preferential allotment that we've done to Joe is partly to finance the acquisition of Walter Pack. So we will continue to generate the cash because Walter Pack is a 30% EBITDA, high cash generating company. So we are looking at acquisitions as we've announced as a trajectory, as the growth trajectory, and the demand in the market seems to be very strong, both in domestic and overseas markets. So yes, we are looking at further acquisitions. So we've already completed 2 over the last years. So we acquired the chrome plating business 2 years ago. We've doubled sales in that business. We've increased EBITDA margins. Now this is this Walter Pack acquisition that we've done. And we are, of course, scouting for additional opportunities. So I would imagine that when we get a good deal, which is value created to our shareholders, we'll certainly look at it.
50% growth is, as you mentioned, on account of the acquisition. What's the organic growth target that you have? Because the street wants to understand what's the inherent business doing like. And going forward, how are you gearing up for the entire EV transition?
So our organic growth, both SJS and Exotech put together, will be close to about in the region of about 24-25%. That is what we've guided the street. And the Walter Pack acquisition added further momentum to this. So that's the inorganic segment. And that is the calculation behind the 50% top line growth that I mentioned earlier. In terms of the EV segment, so our products are very sector agnostic. So decorative products are really the brand identity for all appliances or all two-wheelers or four-wheelers. They provide the appeal to a product for the buyer to go in and acquire or buy that particular product. And customers today demand more features. So fundamentally, EV or no EV, the theme is common across all powertrain. So we are completely agnostic to the powertrain in the automotive industry.
So, okay, it's more of a decorative business, so doesn't really change with respect to what lies inside that vehicle as well. But just wanted to talk to you about the new launches that you have lined up in terms of the clients. Is there any fresh client addition or something in the pipeline? Talk to us about the growth outlook there with respect to client additions and product launches.
So two things. So basically, we already supply to a lot of marquee customers across the globe. So I export to about 22 countries worldwide. And so we are acquiring businesses, new projects with these customers, plus there's a lot of cross-selling opportunity. Every time that I add a new product to my portfolio, I have a captive audience to which I can supply. And that's the reason for our accelerated growth. In terms of new technologies, that is always at the forefront at SJS. We have a very strong new product development team. There's some very exciting products to be launched. So as we have announced, so optical displays inside cars are a big theme moving forward. You have a lot of transformation happening from the conventional driver information system or clusters to a fully integrated dashboard, which would have maybe touch functionality. So that's a new area that we are working with, and we are very hopeful that this will be very well accepted in the market. We will supply it to our customers who already trust SJS with the product development capability. And that's the transitioning that the market is coming to. The other important point I would like to mention is these in-mold decorated parts and in-mold forming parts. So thanks to this acquisition that we are pursuing with Waterpack, we will become a very significant supplier of interior decorative products to the car. So historically, SJS had large dependence on two-wheelers, which we've rationalized very, very fast over the last 2 years. So we expect that our four-wheeler business, and especially the new areas of IMF, in-mold forming, in decoration, illumination inside the car,
right,
as well as the optical glass business will provide momentum to growth.
Sure. Sorry, Sanjay, to interject, but just a little running low on time. Quickly, could you tell us about the consumer durables as well, because you have an exposure there, and the recent commentary suggests that the industry is set to see a bit of decline in the recent months. How's been the demand from that vertical?
So we are expanding that market. So this acquisition, for example, Waterpack that we are doing, 1/3 of its sales come from consumer durables. And these are very appealing aesthetic products. So we are expanding our portfolio. So while the demand, we don't personally see demand coming down. Last year was a dull year, but we think that this year demand will come back. And aided by these new technologies that we've acquired, we are quite optimistic of growth in the consumer durable sector as well.
Right. Okay, thank you so much for taking the time out, Sanjay Thapar, and joining in today on ET Now.